Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your afternoon wrap-up, and this is for the financial markets on Wednesday, the 19th of April, 2017. Well, here we are after 4:30, but before 5 p.m. when the markets reopen. Down day in the stock indices, metal still correcting, especially the gold market. The dollar getting a small rebound, but that's all you can say, a small rebound after yesterday's washout in the dollar. And we're breaking down fairly hard one more time now on the energies. So what's going on in a nutshell? Well, Paul Ryan did come out today and say that he does not see tax reform until the end of the summer. I was on Fox and said that's not even remotely accurate. If the Senate's gone the whole month of August as they typically are, do you honestly think on their vacation they're going to have their meetings and get themselves together? I don't buy that at all. So I think they're lucky if they get it in 2017, and I think that's how the market's addressing it. Now, what could change the game is that 9 days from now, in theory, we run into our debt, our ceiling debt. We can't issue more checks as a country. We can shut down the government, being we, all of us. If the government shuts down, there's going to be horse trading, because the Trump administration will want something that gets rid of this logjam that the Democrats keep putting in front of them. So what you can expect is volatility, but probably negative talk going into that time frame, and I think that's weighing on a number of these markets right now. So as we come to the S&P, we can see on the weekly chart how you've gone from 2401 back to 2317.75. We just missed hitting that low so far this week. We're not that far from it even at this point, so we've got to keep our eye on that. Is this market about to embark on an even deeper break? You've broken on a closing basis on a daily chart from 2390 to 2327.50. Get under this and you could be working your way back down. And that's the scary part. Are we headed down to the 2300 level or lower? And, you know, traders are going to be talking about this. You can see the thrusts that we had down. We recovered. We've come down for another thrust. And the question is, does it poke through here? If it does poke through, especially these lows, I think you make your run towards that 2300 level. And then it's a what if. As we can see on the swing line, each rally high is not higher than a previous high, and each break low, is lower than a previous break low. In addition, the battleground of the 18-day average is starting to fade away. In other words, we're hitting it, and it's becoming more clear each time that the market doesn't want to go through it. The problem is that the support's right here. Look at your Bollinger Band. Each time you hit these Bollinger Bands, within short order, you've made a run back to that 18-day average of closes. So the question is it going to be more of this, or is the market going to take these out and make a run for a lower number? Like I said, the potential of that 2300 zone by the 100-day moving average of closes. That's how I'm coming up with that number. As I'm looking at momentum, it is still pointing down, and as we look at the numbers, you are oversold. You have a 26.87 reading, so any number under 30 I consider to be oversold. But being oversold doesn't mean the market has to just pick up and move. It doesn't. When we come to the Dow, you're even more oversold. Again, hit that 18, and today, with this big break, you're underneath the lower Bollinger Band by a lot. So one of two things. You see how the band has worked right here? It narrowed in and now it's widening a little. Either you pop right back into it, or another day down will start bending the band like that. You see how they came together here and they're working their way? That's what I would expect, and that could lead you back to that 20,120 level. Even though you're oversold, all the trends are down. What do you need to do to negate this? You need to take out the 2058 level here. Today's high would be very nice to take out. to throw the traders and think that maybe this down thrust isn't going to be that bad. A different world is here in the NASDAQ, which got to be a higher high and the lower low. Now, I'm going to have to take the zero and have it point up tomorrow. But even here, late in the day, you couldn't close over that 18-day average of closes, and momentum pointing downward, flattening out ever so slightly, but still more down than anything else. And in the Russell, you got up into the resistance, and I think I said this yesterday, of the 100-day and the 18, and it's proving to be a formidable area. Now, sometimes you don't go to exactly the highs of those numbers, but as you can see, it's doing its job. What's the chart pattern here? Well, here's the scary part. This joins the bear camp. If today's lows are taken out, you would then have lower highs, and you already have the lower low. So you would have another market that can enter the bear camp. What about the NASDAQ? No, it cannot do that. Even if you take out today's low, you got the lower low and a higher high. Then we get to the VIX. Let me get back here. When the market was up here and breaking down, I said maybe it runs back to that 18-day average for support. Well, it didn't quite do it. It missed it today. 1346 was the low and 1331. But I'll give myself credit in that the momentum came down. Now the question is, you're still overbought in it. Does it correct more? What's going to happen right here? I can't answer that, but I can tell you the trend's up. Bond market. Embedded reading, which means you've converted the idea of being overbought to locked into a bull trend. That means people are still buying this. They're scared of what the stock market might do. Second thing, it's running the Bollinger Band with an embedded reading. That's just playing a very bullish scenario until the red line closes back under 80. In the June 10-year notes, you're up over the market at one throng, then you come back under. You had a whole string of rallies here, and if we count them, it's interesting because if we come right back to this day, right here, on this day we closed at 125.15.5 over the upper Bollinger Band, came back and closed, as you see right here, under the market, under it, and then we added those string together, and now we're starting to falter. That's the point that I'm making. So it's doing just enough work to not have 5 days in a row up, but it is overbought, and it's riding that band. This is not a market you want to fight. This also shows you something important. You know, I run into people as I teach all the time, and they go, oh, I'm going to sell the Bollinger Band and go short for that move back to that 18-day average. You have never, ever heard me say that's how you trade Bollinger Bands. It is the exact thing you don't do. It is a very big thing to get out if you hit a Bollinger Band of a long position. It's not the thing to go short because you can get caught in that kind of play. Where's your stop? I wouldn't even know where to put it. So what I think goes on when that occurs is traders are peeling off longs up there, looking for the eventual move back to the right-hand side of it. In the dollar index, a pause in a market that is oversold, came down, but is this just a pause? And it looks like it so far. If it breaks again, 99.05, the lower Bollinger Band, unlikely target, about 60 points lower from where we're at. In the June euro currency, you're in an uptrend, higher lows, higher highs. That's all that I can tell you. Momentum pointing up. So the market probably has buyers between 107.23 and 106.98. I think they would throw in the towel if you got under 106.34, but I can't see any reason for the euro to suddenly fall apart from a fundamental point of view unless the French elections are a complete blow-up this weekend. But remember, it's only round one in those elections. So whoever the two candidates are that come out, they'd both have to be so far left or right to scare this market. If they're not, then the euro probably doesn't have anything in the way of it at this point. In the British pound, we're over the upper Bollinger Band on a spike. Don't be surprised if in a couple of days this market's trading under that band. The problem is what's going to put it back under 125.30 because now we have to wait, if you will, about 6 weeks as the British election takes place on June 7th and see if Miss May gets enough votes of confidence so that she can do real negotiations on Brexit. If not, she loses her job and maybe she's out of where she's at. I don't know. She could also get a win, but not so good that it leaves her pretty much where she's at. So it's going to get complicated, and we'll hear talk about that. As we watch this market, with today's action, this arrow doesn't belong here anymore because you really have a higher low. So you got higher highs, higher lows, and an uptrend that's embedding. I just didn't change that one. I missed it, to be honest. Then we get to the crude, and whoa, you took out 51.23. So now you're going to have an arrow pointing down here, up there. As you can see, I missed these arrows today to get this out on time. And you have really cut the heck out of this market. Looking back, and that's the important thing, are you beginning to get the idea that the first attacks of a 100-day average often result in the market coming back and fishing around it, and in this case falling all the way back down? Wouldn't be surprised tomorrow if you start playing near that 51, 52 mark. You get too much lower, you're going to be looking at the 48, 4900 level. And here's the thing you got to be scared of. You lost the embedded reading when? You had it coming into today. You lost it during the day, and once you lost it, the goal was to get back to the 5182 level, and it hit that. It's exceeded it. Now with momentum still pointing down and still overbought, there could be more downside in that market. Gasoline, same thing. And what broke the crude wasn't crude itself. If you saw the EIA API numbers, it's gasoline. They had a huge build in the EIA and gasoline. That's the same thing that happened last year, and that killed the rally because the refiners start pulling back from saying, hey, if we can't sell gasoline in the summer, what are we doing with all this refining that we're doing? Maybe we cut back on our crude oil purchases. That's what you're facing right there. Nat gas, a little bit different of a story. Back and forth action. This is the seasonal time of the year where nat gas is often stronger rather than weaker. All right, let's talk about something that I think is fascinating. This is Consensus. These are the contributors that send in their market letters, and they're put into sections within Consensus. There's quite a few of them, as you can see. Let's call it roughly 100. Then they break it down into a bullish sentiment index. So they'll look in all the metal letters and they'll say, our people, or the writers that do this, here's the amount bullish, here's bearish, gives you an idea of a neat consensus in the market. I was looking, there's Citigroup and some of the others, they do things that are similar when they're looking at the VIX or other indices. I was reading articles today, I think it was from either CNBC or probably Reuters, it would be one of the two, that was commenting on that type of index that traders use. And here's another one that I think is fascinating. So what you get from Consensus, you get access to their website, you get access to all the newsletters, and of course their bullish sentiment index will be sent to you on all the markets, or you can go in and view it. How do you get a free trial? Call us at this number, go to our website, and or you can click right up here at any point in time, and that'll bring you to the forum where all this is available. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.